What's going on, guys? My name's Kyle. Welcome to the YouTube channel, The Stock Goat. In today's video, I'm going to be going over SPAC stocks, things to look out for when you're buying SPAC stocks, things I'm seeing right now with all this, SPAC stocks coming to the market, reasons why I believe that it was part of the correction that we're in right now. A huge part was from SPAC stocks. So just a lot of, information on SPAC stocks in this video is what I really want to go over because there's a lot of, you know, info being thrown out there, a lot of bad info, a lot of good info, and I just want people to make sure they're being safe because SPAC stocks is a huge part of the market that we're in right now for the past 2 years. So we'll take a look at a couple things that I'm noticing. And only if you feel this video gives you a better insight on the stock market, the direction that it's headed, be sure to subscribe to the channel. I'll be keeping you updated weekly. Whenever I see some big news hit the market, I'll be sure to keep you guys updated as fast as possible. And I haven't really been posting on my other YouTube channels, mainly because, the views have got sliced in half because a lot of people aren't excited about the market anymore. They're not doing a lot of searching for stocks on top of getting, no advertisement at all. So I'm just trying to start from scratch here. We'll see where it goes. And let's get into the video. So guys, this is the website that I get all of my SPAC stock information. When an IPO comes out, um, different information about the SPAC stock in particular. As you can see right here, we've had such a large fluctuation, coming to the market of SPAC stocks. I mean, right now you can see it's almost 554 SPAC stocks in literally a year and a couple months. So this year, it's only been 4 months in, and it's already, surpassed the amount of SPAC stocks going public for 2020. So guys, there's a lot of bad, news going out on SPAC stocks. The thing is, there's a lot of companies that are going public that should not be going public, and I believe this is just what's given SPAC stocks a horrible name. The top companies, I'm talking the top 1% of SPAC stocks in the market right now are literally being held down, shorted to the ground. It doesn't matter what the company's performance is, it does not matter. These companies are being put in this SPAC stock category, and it's hard to break out of this, guys. And you need to look right here before you're purchasing a SPAC stock. Um, Look at the average size of these 500s market caps when they're going public. This is 300 million market cap. What that's telling me is these are tiny, tiny companies going public, guys. For SPAC stocks that I've invested in, I think the absolute lowest I've invested in is probably 1 or 2 billion a market cap. When they go public, that's what they're saying the deal's worth. So literally, you can already say 300, 400 of these are probably under 500 million IPOs. Tiny, tiny companies. And I've been watching a lot of the Motley Fool analysts, and they're saying, a lot of these companies are serious speculation, and they're pretty much getting shorted to the ground because they don't have any revenue. They're pre-revenue or low revenue. You want to make sure you're buying a company with a nice solid market cap, okay? 1 billion plus. That's what I want to look for first. Go into the investor presentations, make sure that the company has some revenue. I would say at minimum, 50 million, okay? If a company has 50 million in revenue, they're on the right track of going public. It's a great time, and make sure that year over year growth is good. So guys, just take a look at this. This IPO count, this is very serious. 550 SPAC stocks, guys. Inside of my Patreon, that's really where I've been at, focusing, trying to keep everyone together. A lot of people have never seen a market like this that are really new, and they're getting, people are getting really, really, you know, getting hammered inside of the market pretty hard, and especially with, the options on these SPAC stocks. We're not seeing, the SPAC stock 2020 type of movements. We were seeing, Nikola 10 to 100, Hyliion 10 to 70, ChargePoint 10 to 50, QuantumScape 10 to 120. Guys, you're not going to see that anymore. That was all speculation and just FOMO. That was some serious FOMO. You got to think the last 2 months we haven't seen a SPAC stock go up $10. It's very rare. Some of the SPAC stocks that have already gone public are getting really, really good headlines. ChargePoint is one of those that is breaking out of that SPAC stock realm. That's a company that didn't go from all the way back down to $10. I mean, this thing is not going under 20. So that's what I'm saying. That's a great company that went public as a SPAC stock. So I've been recommending ChargePoint. That's a really, really good one. Great revenue. Another good one is Butterfly Network. This is a company that has great revenue from last year. They can't really get this one under 15 bucks. They've been trying really hard. I mean, we've seen guys SPAC stocks go all the way from 35 $40 to 7 $8, guys. What that's telling you is these companies don't have the fundamentals and the revenue to back it up. So you need to be very cautious about the SPAC stock, territory right now, guys. We got 550 plus SPAC stocks. I've narrowed down my Patreon to literally five that I'm going all in on, guys. And I'm going to go over that in other videos. You can also sign up for the Patreon. The link is in the bio. It's 20 bucks, guys. I'm going to be giving you all the information. I'm, researching day in and day out. That's all I do is research the top companies that are going to be blowing up soon. So this is just something I just wanted to go over, guys, because I believe that this has caused the market, a lot of retail investors have been investing in these companies. And guys, there's data that's coming out that retail users are entering the market and exiting the market for the shortest time frame of all time. So people are not investing in the stock market at all, for a long time right now because they're entering right now and they're saying, what the heck, nothing's going up, and they're exiting. So that's just telling you, retail investors make up 20% of the market. And, a lot of them were inside of these SPAC stocks and we're just getting pushed out until, the big whales can buy up the quality ones, when the time comes and these are low enough and they're going to start flying. So you kind of got to stay in the game. But I really wanted to go over this SPAC stock stuff because, guys, there's a lot of things that are, really bringing this market down with bad SPAC stocks with no revenue. As you can see, this is the big thing to look for. The average IPO size is 300 million. These are horrible companies that should not be going public. Tiny companies, guys. So if you click the IPO right here, guys, this is going to tell you the new company's going public. And look, 160 million, 100 million, 250 million, 300 million, 50 million. Guys, these are small companies that are not going to gain any attraction over time. These are going public way too early. And this is what I'm talking about right here. You see these tiny companies. I mean, I'll try to get a little bit of move on real quick to see if we can find a quality one. So this is something I would look into, guys. As you can see, Quell, $2.4 billion deal, developing jets. So that's something I would click on is what I'm trying to say. So as you can see, this is a realistic, deal, a $2.4 billion deal, something I would look into. This one's solid, 1.2 billion, 7 billion. So these are decent deals right here. WeWork 8.97. This might be a good one. But as you can see, the overall average is $300 million deals. So that's 400 SPAC stocks that you just want to get out of the way. Don't even look into. You're just wasting your time. Right here, a small one, 850 million. So that's the first thing. You want to make sure you're getting in a big deal that's going to gain a lot of headlines. So these are some companies that I'm watching, I'm invested in. A couple of SPAC stocks that have already gone post-merger. And, these are getting some great headlines. Companies like SKILLZ. I'm seeing this SPAC stock getting multiple headlines. Okay, this is one in that 1% category. Kathy Woods is invested in it, but I'm telling you, I'm seeing like dozens of headlines on this company already. So you want to make sure you're getting in a SPAC stock that's going to gain attraction, momentum, and people are going to, know about you. The stock's not going to move if people don't know about it. It's just going to sit there because people aren't going to know what it is. So you take a look at SKILLZ, we'll click it. You go on order flow, and even though the stock's been, dropping, it looks like larger institutions are buying this up because you can see the $1 million orders right here on Webull, the order flow. The past couple of days, it's a lot of green. Look at this, 3.42, 0.9, 0.18, and another 0.9. So it looks like a lot of institutions are buying this up, as we can see right here. And we could take a look at another one. I'll go on to, Paysafe and take a look at the order flow right here. And as we can see, we had two large orders of inflows in the $1 million range on the 7th and the 8th. A small one on Friday, somebody exited, but overall, I mean, you're seeing these SPAC stocks. This one just went public as well. Paysafe. I'm invested in both of these. These are massive companies, making a lot of revenue, and that's what you want to look for. You want to look for companies producing revenue. I think SKILLZ is producing 300 million, Paysafe 1.5 billion. These both have great market caps. SKILLZ is at 7 billion. Paysafe is at 11 billion. Both undervalued right now. Well, SKILLZ is a little bit higher value, but Paysafe is really undervalued right now. So I think it's like 7 or 8 times revenue. So guys, you want to look and see what these institutional buyers, there's some big order flows coming in on these SPAC stocks, even though they're dropping. You just want to make sure you're getting in on some high quality ones, guys. A lot of these SPAC stocks we're seeing go down to $7, $6, $8. It's because they're not high quality companies. I'm staying away from EV right now as well. I'm only investing in NEO because they are producing huge revenue. And I'm telling you, by the end of the year, that's going to be another company that comes back. I'm going to do another video on NEO soon to show you how fast they are actually growing. But guys, things to look for, with the SPAC stocks, avoid that revenue that's under 50 million or no revenue at all for years, like, QuantumScape. A lot of these EVs have no revenue at all. And, watch those market caps. As you can see, the average on those 550 SPAC stocks are 300 million. You want to make sure you're in the $1 billion range when you're entering these companies so that, they're going to gain more attraction and headlines. I can tell you 97%, 98% of those SPAC stocks will not gain any attraction on the Motley Fool, the NASDAQ, Seeking Alpha. These are not going to gain any headlines at all. So you need to make sure the SPAC stock that you're entering is going to gain headlines over the next couple of months. Make sure it's a big company that, big institutional investors are going to be buying up. So I just want to go over a little bit of things I'm noticing with these SPAC stocks. We know that pretty much all of them crashed 30, 40, 50, 60%, some even more. Even the high quality ones like SKILLZ and Paysafe, these have dropped from 50 to 20, Paysafe 19 to 13. So guys, these are companies you need to be buying up right now on discount. And that's what I've been going over inside of my Patreon. We've been slowing down on call options. I'm going to go over another video on call options, the amount of percentage you want to be in call options to stock. So as long as your portfolio right now, guys, is not at zero because you're not buying weekly call options on meme stocks, you're still in the game. This is a longevity, game. You want to be investing for the next 10, 20 years, and we're taking a hit right now, okay? Some people are taking a hit 10, 20, 30, 40%, and that is completely fine because these stocks are way oversold. I'm telling you, way oversold. I mean, you had quality companies like Peloton, Square, Teladoc drop 30%, guys. Those are some of the best companies in the world. And if those are dropping 30%, what does that tell you? You're not doing anything wrong. So just stay in the game. Be cautious of the 98% of SPAC stocks, okay? Make sure it's over a billion make sure it's over $1 billion in market cap. Make sure the revenue is over 50 million for the year. Those two little things are going to keep you very, very stable for the next couple of years if you want to invest in SPAC stocks. As we can see, there's a lot of companies going public that do not need to be going public. I just had to get that off my chest. You guys are not getting scammed with these SPAC stocks. There's some high quality ones out there, and I'm sure you're doing your research as well. I just wanted to give a couple tips. And I'm going to be getting back in this YouTube flow very soon, guys. It's just the market has been very, very rough, and it's not very exciting to post YouTube videos, when stocks are in the red every day. So I'm going to be getting back at it, and I really appreciate it. If you watch this video to the end, please subscribe to the channel, and we're going to get back on it this year. I still think 2021 is going to be a great year. You have a great day.